Yo, what's going on, everybody? Welcome back to another video in the Day Trading Institution. Hopefully you guys have been enjoying the program so far. Now in this video, what we're going to be covering are the trading sessions. It's going to be important to learn about the trading sessions because this is where there's going to be volume in the market, and we're going to try and go in depth as possible when it comes to during the trading sessions and learning about each and every section. In the next video, we're going to be going over what session you should trade as the trader. So let's learn about the sessions first and learn which one suits you the best. Now, in this lesson, we're pretty much just going to be covering the 4 major trading sessions. Get ready to take a lot of notes. You actually can slow down the video if maybe I'm talking a little bit too fast. But let's kind of get right into it. I don't want you guys to feel like overwhelmed again. These are just very simple concepts. So when can you trade, right? So you can actually trade the Forex market. The Forex market is open 24 hours a day. Does that mean you should be trading 24 hours a day? No, it doesn't mean you should be trading 24 hours a day at all, because there's not going to be a lot of volume in the market during the majority of the day. There's only going to be volume in the market during the trading sessions, and there's only going to be a lot of volume in the 2 major trading sessions. So you should really only be trying to trade during the trading sessions. But if you're a swing trader, then it kind of really doesn't matter. You're kind of looking to get in at specific levels and areas. Now, what is the best time to trade? So before that, let's look at how the 24-hour day looks like in the Forex market. So here are our 4 major trading sessions. 1, we have the Sydney session. 2, we have the Tokyo session. Then we have the London session. And then lastly, we have the New York session. So these are going to be our 4 main trading sessions. Now, session 3 and session 4, the London session and the New York session, are our biggest trading session. 41% of all foreign transactions happen during the London session, and then the rest happen through the New York session. Now, let's look at the timeline of when these sessions actually play out. So we're going to go based off this Eastern Standard Time Zone, right? So we have 1 a.m., then we have 12 p.m. Or 12 a.m. And so on and so forth. So now when it comes down to the Sydney session, as you can see, normally it starts over here, which is going to be 5 p.m. and then ends around 1 a.m. where the Tokyo session starts around 9 p.m. and ends at about 3 a.m. And then London session starts at 3 a.m. and then ends at about 12 p.m. But as you can see, the New York session, the London session do cross over, which we'll get into that in a second, which starts at about 8 a.m. and ends at 5 p.m. being here. Now, this is going to be the timeline. If you want, you can print this out and save it. It's 1 a.m., 2 a.m., 3 a.m., 4 a.m., 5 a.m., 6 a.m., 7 a.m., 8 a.m., 9 a.m., 10 a.m., 11 a.m., 12 a.m., 1 p.m., 2 p.m., 3 p.m., 4 p.m., 5 p.m., 6 p.m., 7 p.m., 8 p.m., 9 p.m., 10 p.m., 11 p.m., and then 12 p.m. Now, let's look at the trading sessions during a better, time zone. So the Sydney session opens up at 4 p.m. Eastern Standard Time, then ends at around 1 a.m., right? The Tokyo session opens up at 7 p.m., ends at about 4 a.m. The London session opens up at 3 a.m., ends at around 11 a.m., and the New York session starts at around 8 a.m. and ends at around 5 p.m. Now, it doesn't mean there's always going to be volatility throughout the entire session. Typically, there's going to be the most volume within the first 4 hours of the session before it starts slowing down. Now, don't forget daylight savings. In the months of October and November, plus March and April, some countries like the United States, the United Kingdom, and Australia shift either to or from daylight savings time. So now let's look at the overlaps in the trading session. Notice how in between each Forex trading session, there is a period of time where 2 sessions are open at the same exact time. During these, what we call them are crossovers, is where you're going to see way more volume in these crossovers because 2 trading sessions are active at the same time. Now, here is the first crossover or the first overlap, which is going to be the Tokyo and London session, which starts at 3 a.m., which you're going to see a lot of volume come in the market, and you're going to see a lot of movement. The second overlap, which is our biggest overlap, which this is our most traded session, is going to be the London session and the London and New York session crossover, which is around 8 a.m. to normally it's about 12 p.m. This is when after 12 p.m. the market typically tends to die off, but 8 a.m. to 11 p.m. Now you got to remember, 3 a.m. in London is 8 a.m. So that's when the banks are going to be open there. Then the trading session starts, then people tend to go to lunch and then come back for the New York session, which starts at 8 a.m. Eastern time. That is going to be the second overlap. Then the third overlap is going to be the Sydney and Tokyo overlap, which starts here. When the Sydney session and Tokyo session actually starts, that's when they typically tend to merge. Now, naturally, these are the busiest times during the day because there is more volume since the two markets open at the same time. Like I said previously, that's when you're going to see the most volume come in. This is typically when day traders and scalpers are looking to take positions if they haven't already, or are just manually watching their trades. So let's take a look at the average pip movement during each trading session. So this is going to be how much each market moves in terms of pips. This is going to be the average, right, during the Tokyo and the London session. Now, the first thing you're going to notice is typically the London session is going to have the biggest pip movements for these currency pairs. Now, if we look at Euro USD during the Tokyo session, we have a 76 pip movement on average. New York is 92 pips, and then London is going to be 114 pips. So as you can see, Euro USD tells you the average pip movement for Euro USD is going to be London session. That should tell you if you want to catch the biggest moves for Euro USD, that's going to happen during the London session. Now, if we look at GBP USD, we look at the Tokyo session. Tokyo session on average, GBP USD moves 92 pips, New York session 99 pips, and then London session 129 pips. Now, if we look at USD JPY, right, not much movement in the pair compared to these other two pairs, right? But USD JPY during the Tokyo session moves roughly 51 pips, New York moves 59 pips, the London session moves 66 pips. If you look at the patterns in this pair, you could see that most of the biggest moves happen during the London session. And this is why sometimes I prefer to just trade the London session. Now, if we look at AUD USD during the Tokyo session, it moves on average 77 pips. It moves on average 81 pips during the New York and 83 during the London session. Now, this doesn't mean that you're going to have this type of movement every single day, but this is just on average when the market conditions are actually trending, right? Now, if we check out NZD USD, we see that it moves on average 62 pips. New York moves on average 70 pips, and London moves on average 72 pips. Now, if we look at USD CAD, on average for the Tokyo session, it moves 57 pips, New York 96 pips, and London normally 96 pips. Then if we look at USD CHF, it moves on average during the Tokyo session 67 pips, then 83 pips for the New York, then 102 pips for the London session. Now, let's look at the trading sessions average pip movement, and notice again that the London session provides the most movement. This is when you're going to see the most volume in the market. Now remember, these are our more major currency pairs, right? Now, when can you trade the Tokyo session, right? Traders that live in America, the trading day actually begins on Sunday night at 5 p.m. EST. However, it takes a few hours for liquidity to show up during the Tokyo session, right? Now, key things to know about the Tokyo session. The main participants during the Tokyo session are commercial companies and central banks. Japan's economy is heavily export dependent, therefore China is also a major trade player in the Tokyo session, hence the name Tokyo session. Occasionally, liquidity can be very thin at times. This is kind of pretty normal during the Tokyo session. It's not going to be every single day where you see big moves during the Tokyo session. This is why I personally don't trade the Tokyo session, right? But there will be times where you have to wait a long time to take a position during the Tokyo session. And sometimes when you take a position during the Tokyo session, it will play out during the London session. Now, Moves in the Tokyo session could potentially set the tone for the day. Traders in the later trading session may refer to what happened during the Tokyo session. So when can you trade the London session, which is the session I personally trade? Traders that live in America, the London session opens up at 2 a.m. EST. This is pre-market hours. The actual open is going to be at 3 a.m. EST. Now, London is considered the center of Forex trading. London mainly benefits from its location and time zone. It's the morning's overlaps with the late trading during the Tokyo session, and London's afternoon overlaps with the New York session. This is why we typically tend to trade the London session. Key things to know about the London session, right? So, since the London session crosses with the other two major trading sessions, this results in a high liquidity and potentially lower transaction costs, meaning that spreads and commissions are going to be lower during the London session compared to, mainly spreads, but compared to the Tokyo session. Now, due to the large number of transactions that takes place, the London session is normally the most volatile session, meaning that you're going to see the most movement during the London session. Now, most trends will be beginning during the London session and will continue until the beginning of the New York session, where you may see a pullback from the trend, or you actually may see a continuation of the trend during New York. But typically, if one pair is trending during the London, then the New York is going to do almost the opposite. When can you actually trade the New York session, right? So traders that live here in the United States, the trading session for the New York session begins at 8 a.m. Eastern Standard Time. Now, key things to know about the New York session is that there is going to be high liquidity in the morning since it overlaps with the London session, which you're going to see again the most movement, right? Most economic reports are released near the start of the New York session. Remember, about 85% of all trades involve the US dollar, so whenever big time US economic news is announced, it affects the market, such as NFP, FOMC. These are all big news events that you want to try and avoid trading. When it comes down to news events and trading news events, it can definitely be seen as a very high risk thing because it kind of does whatever it wants. There's going to be a lot of manipulation during these major news events. Now, usually on Fridays, there's a chance of reversals in the second half of the session. So if you trade New York sessions, you kind of want to get in and out as fast as possible within the mornings, as US traders close their positions ahead of the weekend in order to limit exposure to any weekend news. So what session should you trade? You have to, one, look at your current lifestyle and if you're able to actually trade that specific session. So you got to look at your current lifestyle. Are you able to trade full-time or part-time? Which me personally, I only trade part-time, and then I work on everything else the rest of my day. So I really only trade the London session, and then that's it, right? I'm not actively trading London and New York session all the time, even though there are some days that I do. But I could be considered a full-time trader simply because this is what I do for a living. Now, once you identify the amount of time you could dedicate, then you could select which session you could focus on. Now, remember, this is key. Most liquidity is around the London and New York overlap, but prioritize fitting in which session fits your lifestyle. Keep that in mind. Now, managing your time, which is something that's super important when it comes down to trading, right? Just because the market is open 24 hours a day, it doesn't mean that you need to be in front of your monitor, your computer, every second of the day actively monitoring the charts. You need to set a time for your pre-market analysis, your active trading, and then you need to set a time where you're no longer trading and you're simply just reviewing how your trading day went to look to improve. Now remember, trading is all about balance and discipline in your life. You need to understand that when you actually need to trade the market and when you actually need to step away from the market. Because if you're constantly monitoring the market, you're simply just going to burn yourself out. You're going to fall into the fact of overanalyzing and overthinking, which can make you to cause poor decisions. And the more you stay during the market, the more it's going to affect you negatively. You need to find the right balance, which only comes with time and experience from when you're actively trading versus when you're kind of just going to be doing your homework in the sense of, how your trading day went. Now let's go over a little bit of a recap for this session, right? So recap, the best time to trade. The best time to trade is when two sessions are overlapping. Typically, the London and New York session is the best time to trade. Or you could do the Tokyo to London overlap. But just keep in mind, the biggest session is going to be the London to New York overlap, right? And the biggest session alone is going to be the London session. So when major news are announced, typically when major news is going to be announced, you do not want to be in a trade. You want to avoid being in a trade as best as possible, because slippage can definitely occur along with a lot of market manipulation. And what slippage is basically let's say you set a stop loss at a certain price, meaning that if your stop loss gets hit, you're going to lose money. The news events can happen so fast that the brokerage can't fill your order in time to take you out of the position, and price will go even further than your stop loss. So what can happen is, let's say NFP hits, right, and price blows through your stop loss. Instead of you initially planning on losing $500, you lose $1,200, which is huge, right? Now, the London session is the busiest out of all of these sessions. If you cannot trade London, you can only trade New York. Don't worry about it. It doesn't really matter. What matters most is that you consistently show up and trade that session each and every day. Now, the middle of the week shows the most movement just because liquidity is picking up. This is typically when you see the trend starting to play out and everything else. The beginning of the week, you could see more as like a pullback type of, thing. And then during the middle of the week is when you'll really see price start trending again and doing these really big moves. Now, these are the worst times to trade. The worst time to trade are Sundays when there's low volume, except for Sunday London session, obviously, because that's going to be, your first trading day on Monday. That's going to be the Monday for the London people, right? Fridays, because this is when liquidity dies down as the New York session is closing for the weekend, and traders, banks, hedge funds are closing out of their positions. The holidays, because there's always going to be low volumes for the holidays, nobody's really trading, so you want to avoid trading during the holidays, which right now as I'm recording this video, we're going to be approaching Thanksgiving and Christmas and everything else, so volume is going to die down a lot. Major news, this can be a double-edged sword. A strong price movement, also quick reversal, so you have to be very cautious. Personally, I recommend you do not trade news. And the most important one is personal issues. If you're dealing with any personal problems in your life, you need to step away from the market. Maybe you had just broken up with your girlfriend and you may be a little bit depressed. You definitely don't want to be trading during these times in your life where you're going through it and you're very emotional and you're making a lot of decisions out of emotions. You're simply just going to be negatively affecting your trading account. Just take a break, and when things happen in your life, just understand you need to work towards making yourself feel better so you can come back to the markets and think as logically as possible. If you're fighting a lot with your family, that's going to cause stress on you. If things aren't going well at your job, that's going to cause stress on you. Don't look at the markets as a way to escape that, right? Sure, you could dive deeper in the markets and really start studying and backtesting, but don't trade live. I promise you're just going to be making mistakes. So when there's a lot of things in your life and you're really going through serious personal issues, now I'm not talking about you just got into a random fight, you know what I mean, with somebody, maybe an argument, and then you come onto the market and you just start trading, right? You want to avoid all that as best as possible. You want to actually trade when you're just thinking as logically as possible. Especially when you're in a good mood and everything else. You're kind of you come to the markets with this mindset of, okay, I want to actually perform. That's all I wanted to cover in today's video. So hopefully you guys did understand the video. In the next video, we're going to go over what times you should trade. So there's going to be a part 2 to this, and hopefully you can definitely benefit from both parts. So I'll talk to everybody in the next video.